Hey, thank you all for dialing in this evening. My name is Xin Ting, and I'm the Chief Client Officer of Endowus. So for those of you who are newer to Endowus, we're a digital wealth advisory platform based in Singapore. And this is our mission. Shang-Chi, if you could just go to the next slide. Hey, thank you. Sorry, Shang-Chi. Next slide. There we go. So our mission as a company is that we want to help people invest better so they can live easier today to live better tomorrow and through retirement. So this week, the world celebrated International Women's Day. So women have been driving change and much has been done to promote gender equality, especially in Singapore. But there's one area that we believe where there's still a long way to go when it comes to closing the wealth and investing gap. So we're very honored to have three extremely successful female entrepreneurs tonight joining us to share their personal investment journeys, the ways they prioritize their financial wellness, and advice they wish they had received in the past. So tonight we have Anna Hautanto, founder and former CEO of The New Savvy, who's currently the COO of ABZD Capital, Dr. Elaine Kim, a medical doctor and founder and CEO of Treehouse, as well as Dr. Juliana Chen, founder and CEO of Welltime Media Group. So let me pass it to them to introduce themselves a little more. Maybe we'll start with Anna.
Hi everyone, I'm Anna. I run a F&B investment fund called Gourmet Food Holdings. We have a few brands under us. Mrs. Pho, which is a Vietnamese restaurant, Suta, world's first Michelin star ramen, and Burke's Burger, a halal gourmet burger at affordable prices. So before this, I am running, for 6 years, I ran The New Savvy, which is Asia's platform for women. We focus on financial education for women, what we want to do to actually empower women to achieve financial happiness. I spent 10 years in banking, in investment and private banking, and I think financial literacy for women is one of my biggest passions in life. Yeah, and I'm very excited to be speaking with Xin Ting, Elaine, and Juliana.
Thanks so much, Anna. Can you pass it on to Elaine?
Hi, nice to meet everybody, and thank you, Sing Ting, and the rest of the team for inviting me to speak today. My name is Elaine. I am actually a doctor by profession, so I've been doing palliative care as a doctor, but I'm also an entrepreneur. So I run a business. It's called Treehouse, and it's a co-working space on office business club. We call it a business club that has a preschool and a childcare. So it's really a place where we allow parents, working parents, to work in our office space and have their kids just a few steps away from them in our preschool or in our nursery creche. So it really gives them an opportunity to not have to choose between family and career. You can actually not have to miss out on your children's first few years of your lives, even if you're pursuing a career. And I'm very, very passionate about early education as well. So one of the things that we're doing is over the last few years, we've been building our own curriculum at Treehouse School, and we're also building an educational technology platform and edtech business for early childhood as well. That's focused not just on rote learning and knowledge-based learning, but is also trying to encourage a holistic approach to early education, looking at things like empathy, grit, love for learning, building character, entrepreneurship skills, CEO skills, leadership skills, and so on and so forth. So those are things that I'm very passionate about. And my journey as an entrepreneur has also led me to start a nonprofit social enterprise. It's called CRIB, C-R-I-B. And what we do at CRIB is I co-founded it with a couple of co-founders, and we really are about empowering women to become successful entrepreneurs. And we do this through a number of ways. We do we have a networking group, we do mentorship, we also do co-founder matching, and I also and equipping and training. And we also have an angels network called the CRIB Angels Club, which is made up of high net worth individuals, angel investors, VCs, as well as family offices that are interested in investing in female-led startups. So really bringing a gender lens towards investing and supporting a lot of the businesses that don't usually get funded because of certain gender biases. So those are a number of things that I do. Very, very happy to be here today, and happy to engage in this conversation, which I think is always much needed. So thank you for having me.
Thanks, Elaine. And last but not least, Juliana.
Hi. Can I just, can you see my video?
Yeah.
Oh, really? Okay. I guess I cannot see it. Well, all right. Hi, everyone. I guess I'm seeing the slide deck, which is not me. Second. All right. Hi, everyone. My name is Juliana Chan, and I'm the founder and CEO of Wild Tide Media Group. I would call myself an accidental entrepreneur because I really began as an academic. I trained for 15 years in the UK, US, and Singapore. And after that, I ran my own academic lab where I did research. I wrote grants, I lectured, and so on at a local university in Singapore. But 3 years ago, I decided to follow my calling. You know, they call it the ikigai, where you do what you want to do, followed by what you're good at, and also what someone will pay you for, which is to become a science communicator. This meant that I could basically write for a living. And I call myself an accidental entrepreneur because I never saw that happening. But I was very fortunate that along the way, I met some guardian angels who connected me with investors, and that's how I started my publishing business. So today I run a team of science journalists, designers, marketers, and video producers and editors, and we produce Asian Scientist magazine, among other publications. And our mission is to put science in Asia on the map. So my mission, if I can think of one, is to make Asian scientists global names, household names. I'm sure we can always think of, we can name Marie Curie if you're thinking of a woman. International Women's Day just passed, but can you name a female scientist from Asia? Probably not. It's not that easy. So clearly, scientists from Asia are not household names right now, and that's my mission. We also publish children's books, mostly in STEM, and we also do quite a fair bit of CSR effort focused at my community. I must say scientists are very good at what we do. We're diligent, we are data-driven and technically oriented. But when it comes to financial advice and investing, I would say that we could do with some help from Endowus. So I'm very pleased to be here to hear what I can do for my own financial portfolio and also to share with you my financial journey. Thank you for inviting me to speak today. Xin Ting.
No, thank you all so much. You're all very, very busy. And I mean, it seems like just listening to your stories, that passion seems to be the common denominator between the three of you and how it's guided your professional journeys. And it seems like, giving back to society is something that is very, very important to all of you as well, which is very nice. Shang-Chi, if you could just go to the next slide. So tonight, our Q&A is going to be done via Slido. So if everyone could just open a new window, go to sli.do and put in the participant code 72077. You can ask all your questions there, and we'll be running polls on Slido as well. We can address your questions along the way or towards the end, but we do have to end on time tonight because we have a Clubhouse session straight after. So just ask your questions early on. Next slide. So if you go on Slido now, we have I wanted to start off this night with a quick poll, just to kind of get a gauge of where our audience is at. So why do you think men and women look at investing differently? So you can go into Slido and vote. So that's slido.com 72077. I think if we go to the next slide, we should be able to see some of the results coming in. Yeah. Are you ladies voting as well? Okay, I see the results coming in. Wow, top pick, women are more risk averse. Huh. Interesting. So I actually wrote an article for our monthly column in Business Times discussing this very topic last week about whether women are really more risk averse or there's actually more to this gender stereotype. Interesting. I don't know if any of the other speakers have any views about this.
We'd love to hear what your findings were, actually.
I mean, women are not more risk averse. I think like women just think about money very differently. You know, I think when men talk about money, they quantify it with a level of I guess results that they want to achieve. So for example, like 20%, 100%. And when you hear a group of men talk, it's always like, oh, I made X percent, right? But when women talk about money, a lot of times it's always very personal and it's always tied to, you know, like family. I want to provide for my children's education. So I think it may not be about risk, but it's about the mentality about money, the way you look at money.
I actually wonder if any of the women on this panel chose that. Did anybody choose it? Because like 57% chose it. But did any of you guys?
I'm super not risk averse.
Yeah,
I think I'm too risk taking.
Juliana, did you?
I must say that I have an extremely high risk portfolio right now. So maybe the opposite. As an entrepreneur, you know what, Elaine? I think we are skewed to a very specific group of female entrepreneurs. As you know, we are a very small minority. And to be an entrepreneur, a female entrepreneur is to be a very unique person who takes an inordinate amount of risk, involving our own careers and our own choices. So I think we are more likely to take risks than the average woman.
That's right. Take it, none of the four of us chose that. But it is a common.
How about you, Xin-Ting?
I actually chose the second option. Women are more goal-oriented and see investing as a means to an end. So I did some research on this topic, and what I found was that, actually men and women are not that dissimilar in their investment behavior. I mean, the differences are actually more shaped by like social and demographic figures, right? Like the level of education, your income. I mean, in general, men have more, there's still an income gap, right? So they have more money to invest with rather than really biological differences.
You know, Xin-Ting, I want to add, I just pulled up this Business Times article I read this week about the OCBC Financial Wellness Index 2020, and it actually mirrors what I see here. Oh, well, I guess we do not have the male and female votes. To add, it says 28% of women, 28% of, oh, let's mute. 28% of women versus 48% of men are confident or knowledgeable about investing. So we are already seeing these numbers. And of course, 60% of women have investments compared with about 75% of men. So we're already seeing gender differences when it comes that we already knew about, but it's good to have data on it.
Yeah, interesting. Okay, so let's move on to our second poll. We're only going to do 2 tonight. So second one is, how do you look at investing and money management, right? Stability and peace of mind, goals to fund my future aspirations, independence and freedom, or necessity as a responsible adult. So I guess this is less gender specific. Interesting. Elaine, what did you vote for?
I went with goals to fund my future aspirations, actually. Yeah. How about the others?
I went with independence and freedom.
So did I, Anna. So did I.
Me too. I also went with independence and freedom. I think, just having that choice to do what I want is very important. Interesting. Okay, let's move back to our slides, if that's okay. So I wanted to share a few statistics with all of you here. So, we focus a lot on our physical and mental wellness, but financial wellness matters a lot too. So BlackRock did a survey where they found out that, when people take that step to invest, to focus on retirement, they actually create a greater sense of well-being today. And that's actually true, regardless of affluence, age, gender, actually, or life stage. Sorry, go next slide. But unfortunately, there's still a large wealth gap between men and women, like the statistics that Juliana shared just now from the OCBC Wellness Survey as well. So in Singapore, there's still a pay gap here. So women actually earn about 16% less than men when compared to the median pay. I mean, if you adjust for other factors like industry, occupation, age, and education, it does narrow down to 6%. But the average woman earns $640,000 less than their male counterparts over a 40-year career, which is quite a staggering difference. And women are also just more likely to take time out of the workforce. So 2 in 5 Singaporean women have not yet started saving for retirement. And the ones that have rely mostly on cash and personal savings for their retirement. So, some of these statistics in mind, I actually want to ask you ladies if you could share your, personal investment journeys with us tonight. Maybe like how you started investing. Like for Anna, for example, you studied business, you worked in finance, but how did you actually get started with investing your own money?
I think for me, it was, again, it's always the fear of not having enough money for my family. I always say that I have this fear of being evicted from our rental flat. And so at 21, I set a goal for myself. It's not a goal. I told myself, okay, I want to buy a HDB for my family. And yeah, I guess I was very naive and clueless. So I thought, how much can a HDB cost? So I realized that it's about 400 to 500,000. And I was really, really shocked because to me, how can a very ordinary 21-year-old afford that, right? Like it's a lot of money. And that was the start of my journey with investments, and I guess interest in, making money work harder for you, for myself. And so my first time that I invested was actually I was interning in a investment bank, and just like everybody else, I think what is interesting is I think this timing actually reminds me a lot of then at '07 when I was about 21. Um, I was interning and we went down during lunchtime to go to the ATM to subscribe for an IPO shares. I can't remember what it was, but yeah, it was oversubscribed and we didn't get it. So my colleague and I didn't get it. Yeah, but that was the craze, and that was the level of, I guess, the interest of me wanting to earn more money on top of on top of the salary that I'll earn, and also to make sure that my money worked harder than putting it into a savings account.
Sorry. Forgot I was on mute. Well, Elaine, your background is in medicine, so something completely not finance related. So, how did you learn about investing, and who or what has been some of your investment decisions?
Absolutely. So I actually have been quite fortunate, I suppose. When I was very young, I was sort of exposed by my family more in terms of real estate investing. So like basically, yeah, helping with the family's real estate portfolio, doing some development, A&A and development projects and stuff like that. So I think that was my first exposure to that field of investing. And then later on in my life, it became very much focused on angel investing. So I started, angel investing in my 20s, I'd say. And at that point, it was also an opportunity to, I've always had an interest in business, always had, some great business ideas, but it was a way that I was able to do that because I was working full time as a doctor. But the way for me to get involved without having to really start something on my own at that time was to be an angel investor and an active one at that as well. So that I think that started, with just small tickets, some startups that I thought were really interesting, some companies that was really interesting. Incidentally, the business that I'm running now, Treehouse, I started it out as an angel investor, where it was an idea that I had, and I co-founded it because it was an idea that me and another co-founder had. But at that point, I was running. I was still working as a doctor. I was also running crib. I was quite busy, and I said like, there's no way that I can be actively involved in it, so I'll just come in as an angel investor. And it was only a few years later and I was running another business actually that I was an angel investor in, but I had gotten quite involved in opening the Singapore branch of this business. And so at that point, I said I couldn't really be involved in it actively. And then it turned into, I was just an angel investor. And a few years down the road, when I sold my previous business, that's when they said, will you come on board now as an acting or interim CEO? And then it ended up becoming basically my entire life and kind of taking over and running that business. So that's where it is. And then now, obviously, after I married my husband, and he's the one who's got a great finance background. He worked as he was in a hedge fund when he started his career. He also has worked in commodities trading at Goldman Sachs, and he's got all these he's got that finance background, and now he's in venture capital. So he runs a VC fund, with the current fund being a sustainability focused climate change fund, and so called a major VC. And so he's always been the one that's really kind of also guided a lot of the decisions and helping with, guiding the portfolio. I've also learned a lot, I think, just through, there are a lot of support investment learning that you can do through some family office circuits that I've had the pleasure to kind of be on and learn about different products and everything. And so it's also shaped to some degree how we manage our portfolio. Obviously, we're not really, we're very much private market kind of people, like me being an entrepreneur, my husband being a VC. But we're exploring some other things as well to just have a little bit more diversity in the portfolio. So yeah, just variety of different influences that has kind of guided our investing journey, I think.
I don't know how you find the time to do all that.
Yeah, that's a topic for another day.
Thanks, Elaine. And Juliana, on your side, as I understand, you've started your public markets investment journey fairly recently. So, why did you decide to start now? And, why did you decide to invest via digital platforms rather than via more kind of traditional like banks or brokerages?
Okay, so maybe I should start from when I learned about investing, Xingting. So my dad, until recently when he retired, he was a remisier. And I come from the generation where I looked at stocks on the teletext. Maybe many of you are too young to even know what teletext is, which is all the stock prices are issued on television screen on a black and white line. And my dad has this gigantic graph plot that he will put a dot on for every day's stock price. Then he would use his ruler and he would draw a line to connect the dots. And if you were to open any kind of like Seeking Alpha or Market Watch app right now, it just triggers all the lines for you. And he did that manually when I was a child. So that's what I understood stock purchasing and stock monitoring to be. This was probably in the late 1980s and early 1990s. So that's a while ago. Okay, that's how dinosaur this story is. So as I grew older, my dad advised me to invest in REITs, and I think that is a more of a newer concept. But earlier days, we were doing banks and airlines and so on. So it was mostly a Singapore SGX kind of investment play. And my stocks would give me dividends, and he always encouraged me to hold for the long term and just cash in all those checks, although they have turned digital. Over the years, I think I maintained that kind of very cautious and long-term investment outlook. And even it also shows in the way I put my money in CPF. So you can max out your CPF special account. In fact, you can get tax deductions. I can tell you, my friends who work at MOF, Ministry of Finance, will advise everyone to max out your own CPF to about the 7,000 tax deductible limit every year for yourself and a dependent. So I did that. That's the second thing I did. And I guess I invested in my own business, my time, my energy, and whatever money I could roll back in. So instead of taking it out, I put it back in. But same thing, I just want to bring us to this year, of course. I think anyone would say if you wanted to invest, March 2020 or April 2020 was pretty much the best time to go in. Apparently 80% of US stocks rose last year. So if you threw a stone 4 or 5 times, you would make money. You don't have to be pretty clever. This year, of course, it's the other way around, probably, as the year progresses. So I'm not going to say I know what I'm doing. And I chose pretty much around this time to enter the US stock market. So I announced it on my LinkedIn because I have a lot of nice people follow me on LinkedIn. And my inbox was flooded with hundreds of stocks to buy. I think it's been a wonderful ride for me now that I've made public some of my investment portfolio. So I announced it on LinkedIn, and they really track it, and they will tell me what to sell and what to buy. I must say it's actually a little bit of a crowdsourced kind of community. If every one of you can help me double my portfolio, drop me a DM. I'm just kidding. So I guess that's the journey from teletext to US stocks. I'm not sure how it will end, hopefully well. And I hope to have some money left over for my retirement and my 2 kids' college funds, which ain't gonna be cheap.
Well, you still have a very long way to go in your investment journey.
Indeed.
Yeah. And I mean, that's what we talk about at Endowus all the time, right? It's really about long-term investing and trying to grow your wealth over the long term, because as you mentioned, like in hindsight, right, last March was like the best time to enter the market, but there's no way anyone could have known that at that time. I mean, in hindsight, we all seem really smart for putting in money then, but I remember, and last March wasn't even that long ago. It was quite a scary few weeks, right? We didn't know how long the drop was going to be, and the drop in markets, I think the pace of it scared a lot of people off. But I'm glad that you took the plunge to enter the market at the perfect time. Yeah. Shangshi, if you could just go to the next slide. So I wanted to ask you ladies, what are some of the biggest financial regrets or mistakes you've made in your journey? I mean, I saw this in a Merrill Lynch report where 41% of women reported that their biggest financial regret was not investing more. And maybe I'll start with just sharing mine, right? When I first started investing, I too thought I could stock pick. I mean, I ended up doing okay, probably, around where markets were performing. But what happened was that, I ended up investing only very small amounts. I mean, because I wasn't about to bet like 10% of my net worth on one stock. So, I mean, I didn't take enough risk on my entire portfolio and ended up holding too much cash for a very long time. Yeah. So maybe if you ladies could also share some or lessons you've learned along the way.
I can start. I think for me, I started like you. I started stock picking. Finding things that I understand. So things that I can see or tangible, or industries that I'm in. But I think and then after that, when I was in finance, I spent a lot of time buying things that obviously we have access to research reports. But in a rising market, I think it's not that difficult to make money, right? Like what Juliana said, rising tide carry all boats, right? And you just, it's a matter of what you throw and you make money. But I think what I want to highlight is two things. So one of my biggest mistakes, and it's very strange because I've done this for about 15 years, and you still make the same basic mistakes. So I think all mistakes are actually the same common mistakes. So the first one that I did was to actually listen to a hot tip. So, a friend of mine, I was going out with this guy. We were going out as friends with this guy, and he told me, I want to introduce you to a stock. And I was like, oh, what is it? And he told me it's the glass manufacturer. So it's awarded to a small company. And he said they are going to announce a contract, and this company is going to get it. So it's a micro cap. It's a very small stock, right? Micro cap stocks. So I went home and I bought the stocks, and the stock fell. And then I went to buy in some more. So I bought in twice. And at the end of the day, Apple didn't award that contract to the said company. It awarded to another. They actually bought and invested into their own facility. The summary of the story is I lost all my money because they went bankrupt. Yeah. So I think, and I think throughout my journey, I have heard people who says, you should buy this, or like I have this tip, right? And sometimes I get a bit, I guess, itchy, or, like everyone is talking how much they are making money now, right? So you get a bit tempted. But now that I'm a bit older and a bit, I guess, learned a lot more, I think the way I think about investing has changed. So previously, I look at investing as in I just want to make 20%. I'm very happy. 20 to 25%, I'll sell it, and I make a portfolio for myself, right? And just as long as I make more money. But I think for the past 2 years, what I realized and what I've been thinking about is actually the big money that you can make, the life-changing money and that multi-baggers that you can make is actually investing long-term. Basically, just put it there. Don't feel any urge to trade, and just keep it there for 15 years, for 20 years. And this is where you actually make life transformational money instead of doing that 20%. Because what happens when you trade is, for someone like me who I don't have access to institutional knowledge or insider knowledge, right? You make that 20, 10, 15, 20%, but your losses, it's like falling knives, right? The fall is very, very drastic. So I will tend to lose more. And yeah, so I think for me, the way I think about investments have changed a lot throughout the years, throughout these 15 years.
Thanks, Anna. Actually, there was a question from the audience that I think would be great for you. Do you have exposure to crypto, and what do you think of it?
I do, but again, I'm not a trader. I bought Bitcoin when it was 3,000. I bought it again at 6,000. I am still holding it, never sold it. I think my view to crypto is, if you understand the technology behind it, if you understand and believe in the blockchain technology, it's a good invest. It's something that you can consider. But I will say buy the bigger coins. Don't speculate in the altcoins. But and it's again it's a trend, right? Don't invest all your money into it. Just invest money you can lose, and just put it there. But I'm not a trader. I know a lot of my friends, because I'm in the fintech space. I know a lot of friends who are involved in the blockchain and crypto, and they trade and they may make a lot of money. But I don't think a lot of us have that kind of stomach for appetite. Yeah. So I'll just say invest a small sum if you believe in it, and just let it be. Yeah, I mean, that's my approach.
I think Anna needs to buy all of us drinks if she bought Bitcoin at 3,000.
No, but I haven't sold, you see, so there's no profit yet.
I think that ties in a lot to your earlier question. From my experience, your earlier you asked, like, if you have any regrets, and I mean, I actually believe that's not really no point having some regrets. But when you said that a lot of people, their biggest regret is not investing more, right? And I realized that I do have to catch myself a little bit when that sort of happens. So my husband, he bought into Bitcoin at $100, like, way back in 13 or something like that, right? And he was like, we should mine it and stuff like that. And so obviously now, when you see how much Bitcoin is worth, he sold it. Most of his Bitcoin has been sold. You have to catch yourself, right? And say, like, there's no point in regretting it, I feel, and keeping it for a long time. I mean, we are doing some crypto stuff, like more in DeFi, but because we think that there's more fundamentals there. But I agree with Anna about not trading, because unless you can be like full time doing it, intensely trading on a day-to-day basis, really watching the markets. I mean, it's I think it's hard. So I also try to have a little bit of a long-term view. And the same thing, it's also about really catching yourself and making sure you don't regret things. So we also went in, I put a little into like S&P ETFs in April. And the first thing, like, we did well, obviously, but we kind of were ready to hold on to it in the long term, right? And I think that was a big benefit to know that if it were to go down, it will come out eventually, but we can hold on to it for a long time. So and really resist the urge to trade in and out, I think was good for us, because it's not and kind of I set a timing also. I said that once the vaccine is out, we'll sell out of our position, and you got to fight that urge to not like hold on to it longer in the hopes that it'll go higher. So in that sense, I feel like there's sort of like no point regretting anything, because there's always opportunities. And I totally agree with Anna about like being wary of always thinking I could have made more, and then having that urge to just be trading. I think it can be quite risky and turn into like a bit of a vicious cycle. So that's my view.
Yeah, no, I completely agree with that. I mean, I think what I've learned is that, the market's very efficient. Prices are made of, information that everybody has. And I don't think that I know more than the next person, right? There's like hedge funds, sovereign wealth funds, like retail investors, like everyone is trading the markets every day. And I don't think that I have, an edge, I guess, over other participants in the market. So what I want to do is just get exposure to long-term growth. And I mean, market returns have been decent. Like, for example, you talk about the S&P 500 index, right? It's returned and annualized like around 8% over the last couple of decades. And if I can do that consistently for my portfolio, for the bulk of my portfolio, I think I've done a good job, and I can focus my energy on, running my business, where I think I'm going to see the multiple times of returns. Yeah. Juliana, what about you? Are there, some financial regrets you've made or mistakes you made in your journey?
Actually, I'm going to talk about a mistake that I do not want to make for my children. And I think that will be very valuable to anyone listening who has children. So I was just in a networking event, and these are small, socially distanced ones in COVID, careful. And I heard about a practice that I guess I never knew could be done, or I never thought about. Apparently, parents from very high net worth communities, what they do is when a child is born, they just max out their babies. These are infants, CPF accounts. And instead, and of course, you don't have to max it out to achieve this plan. You can simply put some money in there from a very, very young age. And what happens is because it's fixed, you can't take it out. And the percentage of return, annual return is guaranteed. So when the child is of age, they can use it to pay down their HDB flat. And of course, when they retire, it's a princely sum. So nobody taught me this. Fortunately, my kids are still under 10. And I certainly, when I was a child, never had any help. I was probably 21 and I had $0 in it. So I just want to remind all the parents that you can actually start with your children. A very, very simple way to start is to take whatever red packet money, ang pao money that you get during Chinese New Year and put it there. Instead of putting in a bank account like POSB where the interest rates are probably less than 1%. Here you're talking about 2.5% and above year on year, and the money doesn't, disappear. That's the first thing. So that's a mistake I will not be making with my children. And it also goes the same for freelancers where, same thing, I work with lots of freelancers. Many of them are actually quite pleased that their money is not going to CPF because they have it cash on hand. But remember, that there is also a downside to that. When the time comes, they have not maybe thought about their retirement egg, or when they do, they don't have enough time to build it up. There's only so much you can do as a freelancer. When you fall sick, you have family to take care, you do a lot of other, you're only earning as much as time you have. You're trading time for money. That's very dangerous, especially if you're working on alone and not as a team. That's the first thing. The second thing is, and this is quite short, it is that I did not learn to diversify some of my investments early enough. So because in my community, I speak to some hedge fund traders, some PE office, people who run PE offices and investment bankers. And I just say, I'm a rookie, tell me about your portfolio. I'm always impressed by how diverse their portfolios are. They have precious metals, they have ETFs, they have mutual funds, they have US stocks, they have everything under the sun. So they diversify so well that frankly, right now with the NASDAQ plummeting, they have like no problems because some retail investors are going, all in on Tesla or GameStop and losing everything. So diversification and starting really early with your children is my two mistakes I hope nobody makes. Thank you.
Yeah, I think you brought up two really, really good points there. I mean, time is really our biggest asset when it comes to investing, right? I mean, it's the power of compounding returns. And you really allow your money to grow over time. And second part on diversification, when you see these big market drops, and that's when you appreciate having a diversified portfolio and not having all your eggs in one basket. It's obviously not as exciting as owning GameStop when it goes up 300%, but you can sleep better at night knowing that your portfolio is also not going to, plummet to nothing on the next day. Yeah. So I just wanted to talk about, one more area tonight about family and money. If you could just go to the next slide. Because when it comes to, financial wellness and also stress for that matter, family plays a really, really big part in it. If you go to the next slide. So there was a UBS survey done where, when it comes to managing day-to-day expenses, women here take the lead in that. But it's a very different story when it comes to long-term financial decisions, where it's been shown that 8 in 10 Singaporean women leave major financial decisions like, long-term investments, insurance, retirement to their spouses. So I saw a question from the audience actually on, how do you handle family duties with your partner so that you're free to take care of your own finances and life goals?
I would like to answer that, Xin-Ting. So I myself, I should speak about how my family does our finances. So my husband and myself, we have our own separate individual accounts where we keep our savings and our earnings and I guess salary. And we have what we call a co-mingle account or joint account where we put 50-50 into it to manage all our children's, tennis lessons or swimming class or whatever they want to do, school fees, bus fees, and paying for our mortgage and so on. So that is what we call the commingle account, and we share it. And when it runs low, we just top it up. Now, I think that is a healthy practice, but I've lived for many years in the US, I think 6, and during that time I met many women who simply share a joint account with their spouse. They do not have any of their own accounts. And because the account is joint, I think this goes for Singapore as well. I'm sure it's the same everywhere. Anyone can simply draw all the money from it. That's very dangerous because in an event of any mishap, between the couple, you can be left penniless. And if the husband is responsible for all the investments, some of them may be solely in the husband's name. So when that time comes, unless the law supports women, it may end up being a very lopsided situation. And I wouldn't want any woman to be trapped and caught unaware and have the rug pulled from under them. So frankly, I think this 8 out of 10 situation is actually very, very distressing to me to see. And given that we have statistics on the rising number of divorces in Singapore, as well as globally, we should all be prepared for a case where we might be left in a situation where we have to fend for ourselves. Financial literacy is survival, and we need to be prepared just as we need, a roof over our heads. We need to also know how to manage our money and have a rainy day fund that only we have access to. I think this is me coming from the heart for me, and I would encourage other women to also have their own private accounts where they have a stash of money. Thank you.
Yeah, no, thank you. Thank you so much. Thank you so much for sharing that. I agree that, financial literacy is a life skill. It's not something that's taught in school, but it really should be. Maybe if I'll pass it to you, Elaine, there's, how did having children change the way that you're managing your personal finances and investments? And, how do you sort of divide this as well with your husband?
So I mean, we had our first child pretty soon after we were married. So I think right from the beginning, we already knew that we needed to build towards a common goal of like making sure that we had enough for our children. We are also not big believers of kind of raising kids who are going to be dependent on what we give to them as an inheritance or whatnot, because we feel that our plan is to actually, if we do manage to generate the wealth that we're looking to generate, majority of it will probably go towards philanthropy and gifting it away to causes. So we want to raise kids who have enough to be able to fulfill their potential. So definitely being able to support them for college, being able to seed some sort of enterprise, but we really want to raise kids who are not dependent upon an expectation that they're going to receive an inheritance at a later stage. And we want to make sure that they are aware of this and understand it and develop that grit and understanding of them needing to build their own lives and earn their own livings and so on and so forth. So in terms of how we structure it, we do have, we've set up a trust actually. So in that sense, we're we've kind of designed it in a way where we've thought through the rights that we have in our trust and in the family and beneficiaries and so on and so forth. So I think, we've put some thought into that pretty early on and set up our trust, family trust fairly early on, which obviously may not be relevant to everybody, but in our sort of situation with my husband being American, me being in Singapore and various implications that they may have, that made sense for us. Yeah, and then I think something that I would say is important, at least in our family, is to really make sure that we have liquidity. My husband's a VC, so, and obviously we've invested a lot into his VC fund, which has great returns, but the money is locked up for some time. And me as an entrepreneur, we've invested a lot into my business, but that's also a long-term game. So trying to make sure that we've set aside enough cash to make sure that our family has the liquidity that we need, and really planning that out has been really important for us. And we're very happy clients of Endowus. We feel that's a safe instrument that is, is giving us very good returns and pretty good yield. So we're really happy with that. But I mean, the beauty of it is obviously the liquidity that it provides us. And I think, especially with the family, it's always good. You never know what's going to happen. And so just to make sure we're not over leveraged, and we also have got enough liquidity in our portfolio to be able to meet whatever needs may come along. Yeah. So yeah, that's some of the things that we're doing for our family.
I'm glad to hear that you're a happy Endowus client.
I'm very happy.
Thank you for that. Sorry, if we could just go to the next slide, Shang-Chi. I just wanted to, share some statistics with you as well on family and money challenges that women face. 72% of women in Singapore have taken a career break, and financial reasons are the top factors that motivate women to go back to work after that. But a very high percentage do face salary discrimination, unfortunately. So, I mean, women are statistically going to outlive men, compounded by the pay and the wealth gap. It really, really makes it even more critical for us to take the necessary steps to achieve financial wellness. If we go to the next slide. So I saw this quote online. I didn't actually come up with this, but I really liked it. Every woman should be her own chief financial officer. And okay, so we have about 5 minutes left. So I'm just going to take a quick look to see if there are other questions here. Maybe, okay, what are some resources would you recommend someone who is starting on his or her investment journey, and should he or she engage a financial advisor? And I think this is right up your alley. What's some advice you would give someone starting out?
I think personally for me, the advice will be to start as early as possible. I mean, even for myself, I always felt that I didn't start early enough. I wish, financial education, whether it's budgeting, expense, investments, they were all taught in school, but they're not. So, I think starting early, start small. If you're afraid to, just dip your toes in it, start small. And the last one will be to actually learn as much and educate yourselves, because the most important thing is to invest in the things that you know. And if you don't know, I guess that there's always platforms like Endowus where you have professionals managing it for you. Yeah, but the idea is to always start as early as you can, because I think time invested is actually a great equalizer among investors.
And I'm going to just also say, if you're a woman, you should subscribe to the New Savvy. It's a great resource, obviously, for learning about this. And just to say also, neither Endowus nor New Savvy has asked me to say any of these things. I truly believe in both these products very, very much.
Yeah, I think for women specifically, I think personally for me, I have seen, I think in the course of my life, whether it's my extended family or through volunteer work, I have seen a lot of women suffer financial difficulties because, for whatever reasons, right? Whether they don't work or, their husbands are the one that manages the money, or that controls all the money. And I think for me personally, it's very important to understand money, to, invest your money even as you're earning. But also, I think it will it's not only to protect yourself in the event of any unfortunate things that happen, whether it's divorce or death, but it's also very important to know, because if you have this knowledge collectively as a couple, it will just it will just benefit your household in general.
Sorry, go on.
No, I just wanted to say that resonates with me so much. And I do some volunteer work on grassroots level, and I definitely see a lot of women who really, at the end of the day, and you mentioned, right, they do have a longer lifespan. And, you know, when they're widowed or if they face divorce, you know, they do end up in very, very difficult situations. So what Juliana said and what Anna said, I feel is just so crucially important. And if we have knowledge to share and advice to give to people, and opportunities to really develop that financial literacy for women and girls, I think that would be hugely important and impactful. And I'd love to be able to see how we can work together to do that.
Thanks for everyone sharing. I know we are coming to the end. Thanks, Elaine, Anna, Xinting. I just want to add one thing about maybe less of a material impact, but when I started investing and earning my own money significantly, I felt a great deal of confidence that I never felt before. I truly felt empowered and strong and bold. And, admittedly, there will be many men who appear and, tell me what to do and, oh, you're doing it wrong, you're doing that. But I trusted myself, and certainly I had people who advised me, including my dad. And I felt that it really changed my outlook of who I was as an adult, as an individual. So if anything, it will give you a lot more confidence to know that, I'm an investor, I have money set for the long term and it's growing, even if it's a small amount, versus, just letting it sit in the bank and watching it, watching it depreciate when against the inflation. So that's all I have to say. And thanks very much for inviting me to speak.
No, thank you so much. I actually really resonate with what you just said, Juliana. I think I would not have had the courage to take this entrepreneurial journey if I hadn't gotten my own personal finances in order. It really gave me the confidence to take that leap of faith, knowing that, I had saved a small nest egg, but knowing that I had that ability to invest and manage my money. So I agree. So, with that, thank you so much, ladies, for joining us tonight, for taking time out of your busy schedule. And I'm sure the audience really appreciated the insights, the very personal insights that you had to share with us all tonight. So thank you very much.
Thank you. Thanks for
Thank you for having us. See all of you on Clubhouse.
Thank you for having us.
Bye.
Bye.
See you on Clubhouse shortly.